is closing this eventful year on a stable note. At the moment, there are no bullish factors for the market. Oil is trying to hold at the current levels, which is not always easy. In today's thin market, the bulls gave in to the bearish trend. Meanwhile, the ruble could not benefit fully from the optimism in the global markets due to high demand for the US dollar by the year end. Crude prices are slowly fluctuating during the last trading session of the year. Despite all the challenges, oil quotes are still holding at comfortable levels. Brent oil futures for March are trading above $51 per barrel. WTI crude futures for February have settled at $48.30. Since the beginning of 2020, oil prices plunged by more than 20%. In summer, Brent crude recovered slightly to reach $45 per barrel. A rapid spike in prices was caused by the news about the coronavirus vaccine development in November. At this time, oil rallied by 27%, which still fuels the market optimism. In December, both global benchmarks gained around 7% of their value. Currently, the weakening US dollar creates strong support for the oil market. The US dollar index has been trading below the 90 area for the third straight session. Although investors stay positive at the end of the year, the beginning of 2021 may be far less optimistic. The market is likely to enter a corrective phase, which may then turn into a trend. The recent forecasts of $60 per barrel for Brent have now been downgraded. According to fresh estimates, oil quotes may rise only up to $55 per barrel. Some experts say prices may plunge to as low as $30 in the first quarter of 2021. However, this is a worst-case scenario. In general, oil is expected to trade in the range between $45 and $50 per barrel. In January, market participants will focus on the upcoming OPEC meeting. Investors will also take into account the data on the coronavirus spread. The number of new virus cases may increase during the holidays, thus damping the risk sentiment. Even today, oil is facing pressure from the news that a new COVID-19 strain has been discovered in the US in Colorado. The ruble is closing the year at the level of 74 against the US dollar. In 2020, the ruble depreciated by almost 25%. In early 2020, it was trading at 62 against the greenback, while in March and September it dropped to the level of 80. Despite a recovery in recent months, analysts are skeptical about the ruble's prospects. The Russian currency is expected to continue its downtrend and may even head for the mark of 80 in the coming year. In the next 2 weeks, the dollar-ruble pair is likely to stay in a broad channel. Its lower boundary is located near December lows at 72.70, 73 points, while its upper boundary is seen at the strong resistance at 75.80, 76 points. In the coming year, the ruble's trajectory will be determined by a number of factors. Its main downside risks come from geopolitical tensions. The sanction policy against Russia will probably stay moderate. However, the situation may become worse since Joe Biden is known for its tough stance against Moscow. It's also worth noting that the Russian regulator is planning to ease its support for the ruble in January. Currency interventions from the Ministry of Finance and the Bank of Russia helped keep the ruble afloat in October and November. The Russian currency has a chance of staying higher unless no new sanctions or other risks appear. Then it may easily aim at the level of 73 against the US dollar. In the best case scenario, the ruble could rise to the 70 area by the end of 2021. And that's all for now. Thank you for watching. We wish you great holidays and see you back soon.